Good afternoon, Quasar Markets Live. Here we go. Jeremy VREELAND, my man. How are you doing, bro?
Better by the minute. It's closer to dinner time, and I've done all my trading for the day, and my brain is still somewhat intact. It's kind of
You're
slow
already
this
you're
time of
already
day,
eating
but
dinner at 4:15. I love it, man. Here
start
we
cooking.
are. The market's still sneaking up there. They're still pushing up. Talk to me a little bit about the markets here.
So it's been kind of, I dare I say easy to chart like QQQ, but there comes a time where you've done enough charting where you can kind of glance at things and see where they're going. And this week and part of last week were really easy with QQQ. Before that, it was actually kind of difficult. So it was a wait and see, and I've come to a place where I've gone from like every attitude of learning, like everything in like RSI, volume, all the different sub indicators and all that stuff, moving averages. And the more I understood them, the less I needed them. So
Right.
I've come to like a conclusion where I trade a naked chart with a few drawings on it. And that's all I
Let's
need.
do that. Let's talk about that, Jeremy. I have been saying over the last few months that take your charts, throw them out, do not be wedded to them because you're,
Yes.
you're living day by day. Include you and me have been doing charts since literally day one. That charting itself, it shows you the past, but they're useless when Trump tweets. They're
Yep.
useless when things happen in the news. As I always say, news trumps your charts. But we all need to understand technical trading, and I love it. So we're partnered with CMT Association, who puts all those squiggly lines on there. So tell me about your charting now. What's on your charts right now? What do you have those squiggly lines? What are they?
So I'm actually pretty basic. I mean, I've even gotten to the point where I'm kind of away from patterns for the most part, except for the ones that matter to me. If I take you back to like the Jackson Hole mic drop event,
Mm,
I saw that big ass diamond pattern forming, and I was able to point to all the targets just using that pattern. And it didn't predict what direction the market would go during the talk when Jay Powell was on the mic, but it gave you the limits of where the range was expected
right.
to be. And as you remember, I mean, it hit each one just ping, ping, back and forth like a pinball machine hitting every target, And I mean, that day I had upwards of 200 trades on the micros. It was insane.
And
Um,
those kind of days are wonderful for strangles and straddles
oh
because you
yeah.
knew where the two areas were, right? That's not really all the charting. That's also understanding how to place trades to make it more profitable for yourself, correct?
Right. When you know the range, you know about where the expected range is. You can go a little bit beyond. Like people will look for delta and be like, okay, well, 0.3 is going to be the higher, probability of expiring the money and this and that. Well, this takes you beyond that. So like you can start looking in positions where it's like 0.025 delta, and if it's got enough range where you get an explosive move, that'll be like a 0.5 delta in a minute. So
Right.
if you get into the extreme range and you understand that, okay, well, we're coming up on an economic event, we're coming up on something that can cause volatility. Let's see if we can look in the past of the chart leading up to this, what the insiders are starting to do. And you can see where they're positioning. They're usually going to kind of come to a point where they're just ready to explode either way, but previous range will give you a clue as to where that explosive point is intended to go. So this is where the positions will change based on whatever happens during that event. So it's kind of neat having a lead up to something where you're expecting a broad range, and then all of a sudden, some of these options positions you get into that make no sense to anybody else will make perfect sense to you.
Right.
Um,
All right, well, let's get to it. You got any charts to show us today?
sure, I can get into QQQ, and this is one where I'm kind of let me make sure I know how to do this here. Share screen. I haven't done this in a while, and
Yeah, just click on the present button right in the middle there, and what you want to present.
got it. Let me see here. Okay, which screen now? I gotta tell it which screen now.
You do, yeah.
Entire screen. There we go. Screen 3 is what I want. Dang, I haven't done this in forever. All right, can you see me now? Maybe.
There we go.
There we go. So Q, I like to start at about a 2-hour chart if I'm looking for volatility, and then kind of zoom things in for like the opening of a day. So like we didn't have a great amount of range today. Yesterday was pretty easy target to get to, and then Thursday was like it was awesome. Like right in the middle of a podcast, I do this arm pump. I'm like, yes, nailed my target to the penny. I took profit, walked away. But you start getting into things that make sense to you. So if you look back on 2-hour candles particularly, I spot these wicks all the time, and I realized that that's where the liquidity was. This is where things changed hands really quickly, and trend, was quick to reverse. So we had this nice big build up here. The sellers were waiting right here with a bunch of limit orders, and bam, down it went. When those limit orders get just ripped off the stack, and they do get hit pretty quickly, things tend to change directions. Same with bulls. I mean, the bulls will come back and test a support level. Bam, all the buyers were in here. So I like to highlight those and drag it to the right because I know it's an area where we're likely to have a reversal. And if I spot a short-term reversal, I can take the other side of the trade and start running. So you can get different time frames in that as well. Sometimes you'll see these liquidity zones, I call them, take place 2-hour chart, daily chart. I've got them down to 5 minutes sometimes, depending on what kind of volatility we're having in the market. So last week we get into, I can see primary moves. So I also see an impulse here. So there's a nice trend here from here to here. So I marked that out with a box. I'll find about the mean of consolidation in this, excluding some of the overnight, because sometimes you get a little overreach there. Figure out where the middle of that range is, map this move and repeat it up here. So if we were likely to hit a full impulse primary, I call it, in a secondary move, this is where the target would be. So up here we would see, this move was half at 526.30, whole up here at like 530, and it pretty well closely got there. I mean, it did at least hit this half point. So if you were making a trade on this, you would target the half point and be happy. You wouldn't necessarily need the whole pie. You just need a few slices of it. When you get something where you get an extended move here, like here we hit, just up to the edge of this half of a third secondary move after this guy, and then it rejected up here. That's where that 533 target was. And I was like literally in the middle of a podcast, you see me go, yes, cha-ching, I'm out of my NQ position, and down it went. And then the next minute, Matthew's like, hey, I'm shorting Tesla now. I'm like, I looked at my options chain. I'm like, yeah, all right, I'll day trade that. So
Right.
I started trading Friday expiration contracts in the middle of a Thursday, and I was in them for about an hour and a half, and just ka-chinged out of that just long before the day was over. And it was really easy because all I had to do was wait for the market to turn, and Tesla took a lot of weight out of Q, obviously.
And one of the things that I say is that charting shows you where the past is, and it helps you predict the future. Let's pull up a Tesla chart. I think a lot of people are looking at Tesla and going, "Ooh, talk to me about Tesla charts."
I haven't even looked at it this morning. I just looked at it from Thursday.
But he's going to show you, ladies and gentlemen, he's going to show you how to add your liquidity zones on your Tesla chart.
So here we have a couple of things to pay attention to. Here we found the bottom here on Thursday. Obviously, people started buying it right around there, so we'll mark that out. My default color is purple, but if it's a 2-hour, I tend to turn it orange. But just for intents purposes and saving time, I'll just leave them in purple for today. So we have this entire move down, right? This was a news event. People panic sold, what have you. It's all in the previous chart. You can kind of ignore the steps up to it, and you want the primary, the whole meat potatoes move, right? So I tend to take the wicks out of that, find the midpoint. So if I was to trade this back up today, I would have been looking for about half that move back, because half back after an overreaching move or something that's a little extended is very typical. Half back is like something you can have with a high probability. And if you look, this little doji right here, after bouncing off that bottom overnight, it went right to that halfway point. So if you just measure the biggest part of that impulse, half back is like a common law almost. At this point, gave half of that back to support. This looks like a double bottom to a lot of people, and it kind of is. You got your high, your low, and your mid. It gave back to that halfway point and extended higher. Now we're above half back of the impulsive move that it made. So we're technically in a trend. Typically, when you break this point, it's very likely price will test it again, and either it will break down and test support, or it will continue to trend. That's when you start looking for impulsive moves. So you can take this as an impulse, kind of figure out about half of where you would expect consolidation to be. So if this turned into a flag and you were to see like the continuation on this, just map it out like this, just very simple. And if you look here, your fib level's right here, which is just about the upper 2/3 of this whole block. That would be an extension target. If you're just scalping it, look for half that move. Pretty simple, right? It just keeps things basic. You don't need moving averages. You don't need volume. You barely even need a pattern to figure these out.
And this is on a 2-hour chart. Is that correct?
This is on a 2-hour chart.
I love it. I love it. All right. Well, Jeremy, you've given us a lot today. Support, resistance zones, liquidity. You've kind of showed us a little bit how you technically trade too as well. Jeremy, tell us a little bit how they can get to know you, man.
Yeah, I'm pretty much all over Twitter. Lately, I've been focusing a lot on the Rebel Finance podcast. We're on YouTube, well, twice a week these days, with a new guest on there talking about many things. This morning, we got into the Asian market space. I did have to kind of tread lightly because I don't want to upset the CCP, but just to kind of figure some stuff out over there. Last week we were talking about some pretty average stuff for just different market stuff. But we get into a lot of details that make sense, and we find a lot of thematic points at that point as well. So like we'll get into this week, the theme seems to be picking up on like robots, AI, and a little bit into quantum computing. A lot of those sectors are starting to rotate. Pretty busy with that. So like my personal Twitter is like kind of falling off.
I love it. And you're with my friend Matthew Tuttle over Tuttle Cap. You're an analyst over there. So you're a busy guy, man.
Man, I got a lot of balls in the air and they're all on fire. Yeah, it's a lot. It's a lot to deal with, but I love it. I love a good challenge. I love keeping my mind busy, and I love learning new stuff at the same time. So it's been all of that and more.
And I love it too, Jeremy. We will see you right back here next week, and I will be bringing in 2 minutes. I'll bring another person, Kevin Green from Schwab Network. Jeremy, we'll see you right back here next week.
You too, man. See ya. Tell Kevin I said hi.